Do you have a financial strategy for retirement? So no matter your age, you need to consider a plan that will help you avoid three things. Whether you're an investor, have your own business, or you're drawing a paycheck, you need to know how to avoid these three killers of building wealth. Hi, I'm John Havey, a financial strategist with Life Legacy. So what are the three things you want to avoid in order to build wealth and have plenty of money for retirement? Well, the first and biggest is taxes. While you may not be able to bypass taxes in a lot of areas, whether it's your investments or your paycheck or at the grocery store, you can position your after-tax money in a place that will grow tax-free and that you can access tax-free. Now, before you say, oh, that's just a Roth IRA, well, hold on, it's not. It's even better than a Roth. The second is inflation. So how do we get around inflation, you ask? While we can't avoid it altogether, you can put your money into a financial vehicle that is tied to inflation. What does that mean? It means that the asset you have your money in becomes more valuable as things become more expensive, thereby providing you with more available cash. So as the market inflates, so does this asset. And the third killer of wealth building you want to avoid is market volatility. Not just volatility in the stock market, and this is the easiest to avoid, but what about volatility in any asset class? Real estate, oil and gas, gold and silver, of course, the stock market, cryptocurrency. Those are all examples of assets that can and will fluctuate up and down. Can you avoid being part of these down markets where your asset is less valuable? Yes, you can. So what is the one financial vehicle where you can park your money and it will avoid taxes, inflation, and market volatility and allow your money to grow tax-free, allow you to avoid the market downturns, and allow you to access it tax-free? The answer is a maximum funded indexed universal life contract. Now, this is an insurance contract, and if you have any doubts about how and why an index universal life insurance contract, or IUL, is a superior financial vehicle than any other asset class, let me explain in very simple terms without the hype. Okay, here we go. So the IUL and why it's a superior asset. Number one, it grows tax-free. According to IRS code, being an insurance contract, your money that you put in grows tax-free. Number two, you can access it tax-free. Again, according to IRS code, you are allowed to access your money without paying any tax. Number three, your principal remains and continues to grow even when you access your cash. So 100% of the principal still stays in an account growing, even though you accessed part of that cash value. Number four, there's no limit to how much you can put in every year, unlike a Roth IRA, for example, where you do have limits. Number five, you don't have to pay back money that you take out, unlike a real estate loan, for example. Number six, you can put money back in that you took out and thereby increase its value. Number seven, accessing your money doesn't require you to fill out lengthy forms to qualify or be subjected to what your credit score is and so on. Number eight, your money is usually available to you and in your hands within 3 days. Different carriers may vary by a day or two, but it's usually close to that. Number nine, if you are funding it on a monthly basis, for example, you can skip payments if you need to without risk of losing your insurance contract. Number 10, if you did skip payments, you can add additional money later to make up for those skipped payments. Number 11, your cash value growth is tied to a market index, and there are several to choose from, but is not in the market. So your money is tied to a market index, and that index goes up, then your money goes up. But because it's not in the market, your money doesn't go down if the market goes down. And these indexes will grow substantially in years of inflation when the inflation is higher because your money is tied to things that inflate. Number 12, because your cash value is tied to a market index but not in the market, you don't lose money in a down year. This means you're not participating in losing years and you're avoiding market volatility. Number 13, you can change indexes to maximize growth. So for instance, if we're coming off a down year, for example, there may be better indexes that will potentially earn more and increase your returns. Number 14, some carriers will allow you to lock in gains during the year. So for example, let's say the market's up 25% in the first 6 months of the year. You can lock in that gain and thereby avoiding any risk of what the market could do for the remaining 6 months of the year. Number 15, you can access your cash value at any time, usually after the first year, although the longer you wait, the better. Number 16, you can move money from one asset to an IUL and save money on taxes that would have otherwise been paid on those other assets. Number 17, if you think the markets will be down the coming year, you can choose a fixed interest rate and therefore still grow your cash value if the market is down. And number 18, because this is an insurance contract, when the insured passes away, a large portion of your cash value, at least 5% more than your total cash value by rule, passes on to your beneficiary or your heirs tax-free. Remember, this is an insurance contract, so there is a death benefit. Now, in order to make the IUL work to your maximum possible advantage, that is maximizing the cash value growth and allowing you the highest amount of cash value you can access in future years, it's imperative that you structure it properly. And here are the three main specifications on how to structure the IUL for optimal growth. First, you want the least amount of life insurance and therefore the most amount of cash value that will grow. This maximum is determined by how much you're putting in and how fast that is allowable by IRS rules. Secondly, you want to choose an insurance carrier that has more favorable IUL products and market indexes to choose from. This allows you more flexibility and the potential for the highest returns possible. And lastly, if you can, fund your IUL with the most amount of money in the least amount of time that is allowed, again, by IRS rules. This is no secret. The sooner money is in, the sooner it grows and compounds. There are many other benefits and features to an IUL that I haven't listed here. For example, because it is an insurance contract, someone is going to be insured, and that means you have to qualify based on your age, gender, and health. Think you won't qualify? That's okay. If you have a spouse or a child, a close relative, you can be the owner of the policy, and that person is the insured. If you'd like to find out if and how the IUL can work for your financial goals and provide you with living benefits of tax-free growth and tax-free access to your cash, contact us directly and we can do a financial strategy session to give you peace of mind about your financial future. Use the link below or to schedule a call, or you can send an email to me personally, john@lifelegacygroup.net. I look forward to speaking with you, and here's to your financial future.